The double entry system. It's a system used to post and record entries into the general ledger after the completion of journals. The ledger is prepared using the duality principle as learned earlier. As entries are posted, the balance of the accounting equation should be maintained. Let's review our progress on the accounting cycle. An analysis and classification of source document has been done. The recording stage into subsidiary journals was successfully completed. Currently, we are preparing to do the posting into the general ledger. The fourth and the fifth stage will be done later. To remind you of the duality concept, also known as the double entry system, it states that every transaction recorded will have a twofold influence over the financial position of an entity. In other words, it's saying every debit transaction recorded will have the same entry recorded on the credit side of an account. Let us review on what we have covered previously on the accounting equation. For assets, we said that transactions that increase assets will be debited, while those that reduce assets will be credited. Equity, transactions that reduce equity will be debited, while transactions that increase equity will be credited. We have seen how expenses and income accounts have affected equity. Therefore, expenses, because they reduce equity, they will be debited, while income, as it increases equity, will be credited. For liabilities, transactions that reduces liabilities will be debited, while those that increase liabilities will be credited. That's the T format layout, clearly showing the left-hand side and the right-hand side of an account. Now the following details will appear for every account in the ledger. The name of the account, the left-hand side representing the debit side, while the right-hand side will be the credit. Then the first columns will be used to write the dates, then followed by the details. Under the details, we'll be writing the Contra Accounts. After the details will be the folio column. Folio column reflects where entries are recorded that are being posted. Then the amount column. These are the journals done and completed from the previous lecture. Every column in the subsidiary journals represents an account in the general ledger. Please note that posting from subsidiary journals into the general ledger is done at the end of each month. The first postings will be done from cash journals, then followed by credit journals in the next lecture. Starting with the bank column from the cash receipt journal, where income received was recorded and deposited into the bank account. Deposits increase the bank balance. Bank as an asset will increase on the debit side. Therefore, bank will be debited and contra accounts credited. Output VAT will be credited, sales credited, accounts receivable credited, discount allowed debited, and individual accounts under sundry details will each be credited. Cost of sales, it's not cash that was banked, it's a calculation that we have derived at. Therefore, cost of sales on the accounting equation is an expense. It will therefore be debited while trading inventory account will be credited to reduce the inventory with goods that have been sold. Then for the cash payment journal, the bank column represents all payments that were done through the bank. Payments reduces the bank balance. Bank as an asset will be credited, while the contra accounts will be debited. Input VAT will be debited, trading inventory debited, accounts payable also debited. If we had discount received, it will be credited. Then each and every account under details of sundries will be debited. In the receivable journal, we have recorded all credit sales to clients. By starting to post the accounts receivable, we will debit it because accounts receivable is an asset. Asset increases on the debit side. Then credit the output VAT, credit sales. If we add the two, they will give us the total debit. As it was explained earlier, cost of sales will be debited, inventory account credited with the goods that were sold. In the account receivable allowance journal, we have recorded all the returns from our clients. Returns reduces the balance of our debtors. Our account receivable is an asset. Asset reduces on the credit side. Receivable will then be credited. The output VAT debited. The debtors allowance debited. When we add the two, they will give us the total of the credit. Cost of sales will then be credited, while trading inventory will be debited with the goods that were returned. In the accounts payable journal, we have recorded all purchases on credit from our suppliers. Therefore, accounts payable on the accounting equation is a liability. Liability increases on the credit side. The accounts payable will therefore be credited. The contra account to this will all be debited. Therefore, we will debit the input VAT, debit the trading inventory, debit individual account under sundry column. For the accounts payable allowances journal, where we have recorded returns to our suppliers, returns reduces liabilities. Therefore, accounts payable as a liability will be debited, input VAT credited, inventory credited. If you add the two, it will give you the total of the debit. Now that we have resolved the debit and the credits in the journals, we will start with a process called posting into the general ledger by posting first the cash journals. We are in the cash receipt journal. We will start by posting first the bank column. We will open up a bank account in the general ledger using the T format. And normally, this process of posting into the general ledger is done once a month and at the end of the month. By posting now the total of the bank account, we will go to the bank account on the debit side, show the date as at the end of the month, 31st of March. Under the details, we will be writing total receipts because these are the receipts for the month. Then under the folio, we show that entries were recorded in the cash receipt journal. The total amount under the amount column as was calculated in the cash receipt journal. We have posted the debit side of the CRJ. The next step is to post into Contra Account. In the ledger, we open up the SARS VAT control account to post the output VAT. I have chosen the control account instead of the output VAT account to shorten the length of this presentation. It will also be the same thing with the input VAT. It will be posted directly into the VAT control account. On the credit side of the SARS VAT control account, we will reflect the date at the end of March. Under details, the contra will be bank. The entry is posted under folio from CRJ. The total amount is calculated in the column. Next is the sales column of the CRJ. We will show the date, the end of March. Under details, bank, folio column, CRJ, total amount as it appears in the CRJ. We move on to the accounts receivable column. We go to the accounts receivable T account. On the credit side, we reflect the date, the 1st of March. Details, bank, folio, CRJ, amount as was calculated in the CRJ column. Under details of sundries, we will start with capital. We go to the capital account on the credit side. We reflect the date, the 1st of March, the details, bank, the folio, CRJ, the amount is shown in the sundry column. We move on to the next account under sundry details, which is rent received. We open up the rent received account. On the credit side, we reflect the date, the 1st of March. Details is bank, folio, cash receipt journal, amount as shown under sundries. Moving to the discount allowed column, we open the discount allowed account in the general ledger. On the debit side, at the end of March, we reflect the date. Under details, we write accounts receivable, not bank. Why? Because the total for the discount allowed was not banked. This total was included under the accounts receivable column. That is why under details we are writing the accounts receivable. Folio, CRJ, total amount as calculated in the CRJ column. For the cost of sales column, we open the cost of sales account in the general ledger. On the debit side, under the date 31st of March, details, trading, inventory, because remember that cost of sales, it's not amount in the bank. It's an amount that we calculated so that we can reduce inventory. Under folio, CRJ, total amount is calculated in the CRJ. Still on the cost of sales column in the CRJ, we are now posting to the Contra account of cost of sales, which is trading inventory account in the general ledger. On the credit side, we reflect the date at the end of March. The Contra account for the entry is cost of sales, recorded in the CRJ. Total amount is calculated in the journal. We are now posting the cash payment journal entries. We will start with the bank account. We will go to the bank account already created when we were posting the CRJ. You will see that on the debit side already, we have recorded an entry from CRJ. Now this time we are going to the credit side of the bank account. Therefore, at the end of March, under the details, we write total payments because these are the total cash payments for the month. The folio, CPJ, because the entry is recorded in the CPJ. Under the amount column, we reflect the total amount that was calculated in the CPJ. Next column to be posted in the CPJ is input VAT. Input is the VAT that we should claim against the output that we have collected. Therefore, we go to the SARS account. On the debit side, we reflect the date at the end of the month. The entry is the bank under details, recorded in the CPJ, total amount as recorded in the journal. The next, posting the trading inventory column. We go to the trading inventory account already created while posting the CRJ. On the debit side, we show the date 31st of March, details its bank, folio, CPJ, amount as calculated in the trading inventory column of the CPJ. Entry is for accounts payable. We go to the accounts payable. On the debit side of the accounts payable, we show the date at the end of March. The details, its bank. Remember, we are crosscasting to the total of the bank. Folio, CPJ, total amount as calculated in the CPJ. The last entry in the CPJ is the sundry item called salaries. We go to the salaries account. On the debit side, we show the date at the end of March, the details, bank, the folio, CPJ, amount as shown under the sundries. If we had the discount received, we would go to the discount received and post the entry.